everyone, good afternoon. Welcome to Weekly Outlook. Hope you had a beautiful weekend. Enjoyed the time with the family, friends, and went outside to calibrate. And hope you guys are ready to get after it this week. So as always, you guys know the drill for the weekly outlooks. I start with the economic calendar. So this week we have CPI, so majority of the price action will be around Thursday. But before that, we have FOMC meetings. This is different than FOMC, just so you guys know. It sometimes doesn't bring the same volatility that normally FOMC does. Monday, Tuesday, we have no news. However, I'm going to look at the charts in a second, but because of the Friday's close, I am actually expecting some sort of large range or on Monday. I believe it's either going to be on Monday or Tuesday, but we'll see. Likely to be Monday though. Then on Friday we have PPI at 8:30 in the morning. For energy sector, same calendar as always. It's the midweek red folder news. So if you're trading crude oil or any other energy assets, you should be focusing on Wednesday, Tuesday, and Thursday. Other than that, the earnings. It's the second week of the fourth quarter. The big earnings will be later, I think, next month during November, like mid-November-ish. So on the earnings side, nothing nothing major is happening this week. So you shouldn't be concerned about the earnings and trading the PM session. Besides Wednesday, because there's FOMC minutes. All right, charts, the fun stuff. Hey, what's up, man? Alright, so I'm going to start with the weekly of NASDAQ for one reason. The reason is 2 weeks ago, NASDAQ printed a weekly busy. I actually want to see this failing, but it did not. Instead, we had IOFED down there last week, and this also confirmed or formed a swing high, which is now a buy side liquidity with an IOFED on the weekly. So the likelihood of this being a market maker buy model in the lower time frames is more than not right now. Although I was favoring sell side the whole week last week. Friday's close kind of changed that bias, to be honest with you. And I'll look at it on the lower time frame and I'll tell you why I'm kind of flipping bias here. So the level, the buy side is at 538, 20,538. Nasdaq should ideally be drawn up there from the weekly standpoint. Now on the daily, things are a bit more interesting. Alright. Things are a bit more interesting because market actually didn't displace at all since mid-September. It's just kind of wiki. And it didn't form any SIBIs, BISIs whatsoever. I was thinking about an immediate rebalance last week. It didn't also happen. But what I see from the daily perspective is, so we had some sort of a sell side delivery from early September and then a rally, which caused a breaker block essentially from August 29, from August 29 and August 30. The up two consecutive up close candles are actually the order blocks. So if you draw that in time, you'll see, actually, I'm going to just annotate the wick. You'll see the bodies from last week on the daily is actually respecting the breaker block. It kind of looks to me that this was a long accumulation, although I don't like the lows. But, I don't necessarily, I wouldn't go against the order flow anyway. So if it's not willing to take out these lows, why force it, right? So this breaker block in reality should cause buy side delivery, especially because of the bodies respecting the upper threshold of the breaker block. This is essentially a unicorn with a lack of a fair value gap, but technically you can use implied fair value gap, PDRA, which I don't like to use, but let's take a look at that. So basically wick CE and the area in between, implied fair value gap. I rarely use this, but the reason I'm looking at this right now is mainly because of the fact that the daily time frame lacks displacement or lacks imbalance. So every time price moves, it overlaps the candle and basically failing to have some sort of fair value gap. So um, the daily should be bullish, and the weekly time frame also looks bullish. I'm not gonna lie. But things on the 4 hour, let's get down to the 4 hourly now. Things on the 4 hourly. So by looking at the 4 hourly, let me clean the chart though. What's good, Kings? By looking at the 4 hourly, as you guys know, I wanted to see this being a market maker sell model clearing the equal lows. Didn't happen, or hasn't happened yet, but I don't think it's going to happen for now. So what I'm seeing is we traded technically down into discount and accumulated inside the discount, and price popped on Friday. That's why I said things actually have changed. Has changed with the Friday's close. So this is the Friday's close candle on the 4 hourly, and it closed rather strong. So on Friday, also the low of the session, New York session, was the range equilibrium, and it popped from there. It was a choppy delivery, in my opinion, but it's what it is. So by the look of the 4 hourly, I can see the CB from October 1st being basically a trap fair value gap or an inversion fair value gap, and we have equal highs, basically smoothies, as you would call it, bro. September from September 30, and I believe early on at least for this week that should be the draw on liquidity. So the level for that is 20,331. So the only thing I want to mention here is because NQ technically didn't raid the sell side, so it did a lot of damage here at the buy side when it was consolidating or accumulating. So it formed three drives, but the three drives did not deliver equal lows. So instead it left equal lows. We didn't see sweep below the lows, okay? And because of the fact that the sweep, it's lacking sweep of sell side here, although there's a bullish SMT divergence, I'm aware of that, and I'll be talking about it in a second. If failure above 331, 332, I think it's going to send price back down into these equal lows. So the condition here is the buy side is draw. That's not conditional. It is draw on liquidity, but it has to displace above that buy side if it really wants to go for all-time highs. If it just sweeps and shows some sort of weakness, I would still expect afterwards. I would still expect sell side delivery, and because we have CPI on Thursday, this could actually run that low this week as well. It's 500 points. It's not a lot for a CPI day, so be careful. Just always at the end of the day, after New York's stock exchange, the equity close, just refer back to higher time frames and see where price is standing and how it closed, etc. So that will be my main condition for the week. Until this buy side is taken out, I'm long biased. After it's taken, conditionally, I might be short or long. We'll see. I'm not gonna dive into hourly that much because it's the same thing essentially. Equal highs, market popped, and here's the key. The key thing from Friday's PA though, on the hourly standpoint, is so initially at 8 o'clock, and which was NFP candle, it popped right, then it dumped all the way down, but the key here is the 8 o'clock candle's low never got violated, which means price or algorithm never formed a bearish order block here on the hourly time frame. So that's kind of a signature or it kind of explains the pop afterwards. Although in my opinion it was not tradable, but because of the close of the Friday, I'm leaning towards these equal highs. I think it's that easy target for the market. Alright, not gonna dive into the 15-minute and all that because that's the concern for the New York session. It's irrelevant for now. The lows are suspicious though, I'm not gonna lie. Alright, yes. We also have a gap up, weekly gap. I need to close this. Which means if tomorrow opens below the NWOG, that would be ideal to go long in my opinion. Tomorrow, Tuesday. But actually, I forgot to mention one more thing. So Friday's candle on the daily is basically a strong candle close because of the fact that we had a strong candle on the Friday. I am actually interested in trading No News Monday. I believe it should be a continuation to the upside because of the fact that Friday closed strong on the daily. So that being said, I'll be live streaming tomorrow. But if the PA is bad, if the PA ends up being bad on Monday, and if it just chops, I will not trade obviously, but I'll live stream on Tuesday instead because we should be seeing continuation on either Monday or Tuesday, attacking the buy side. So ES, let's start with the weekly. Same deal on ES. It formed weekly BC 2 weeks ago. So last week it traded down into the weekly, weekly BC. Traded down into, I would say, like slightly below the 50% the CE of the fair value gap, and kind of closed rather strong. So basically ended up being an IFED. Now, if things go south from here before taking the buy side, I think that means we're going to be having a weekly accumulation inside the BC, which is not likely though. I think it's going to be faster just due to the fact that Thursday's CPI. So on the daily, pretty similar deal with Nasdaq. So price initially offered sell side and rallied. There's a market structure shift here, although I don't like to use that word that much. It formed a breaker block at the same level as Nasdaq. It lacks fair value gap, but there's an implied fair value gap as Nasdaq also has somewhere around here from the wick CEs this week from September 20 and 18. So last week it traded down there, respected the breaker block and the implied fair value gap, and rallied. There is also SMT divergence at the lows. You don't see this on the higher time frame, but on the 4-hourly and the 1-hourly there's a bullish SMT divergence. But on the daily, yes, has a purpose to go up, unlike Nasdaq actually. On the daily, yes has equal highs. Okay, this is a daily buy side liquidity, and in terms of the daily expansion, it should be levitating towards the buy side from here because of the fact that how Friday closed. So we'll probably end up having some sort of power 3 here, but I want to see a displacement above that buy side if things are really bullish. Okay, that's the main key. That's the key takeaway basically. So on the 4-hourly, this is the SMT divergence on the 4-hourly. It looks like a buy side. The price also traded down into the EQ, range EQ or discount, formed the SMT, consolidated the whole week basically until NFP, and closed strong eventually on Friday. These lows, I mean, although it's an SMT, it's too clean for my liking, honestly. Like, I actually want to see Nasdaq trading below those equal lows and clearing them before going for the all-time highs. Now, it doesn't necessarily mean it's going to happen this week, but I actually want to see that. But for now, things are looking more bullish than bearish. So for Nasdaq, for ES rather, I'm expecting this market maker buy model to get completed. So the target for the market maker buy model should be 5,830. This is daily equal highs on ES. Should be easier for ES than Nasdaq because it swept the lows and it has a daily objective. Nasdaq is the same singular buy side, whereas ES has equal highs. So on the hourly, it's the same deal, like pretty much looking the same with a different perspective. Friday's fair value gap on the hourly could actually end up being a breakaway gap, and we could just go for the buy side even during the overnight, during Asia session. Honestly, ES looks more bullish. ES was actually a weaker pair during the last week's PA, the whole week, but it ended up getting stronger here just because of the fact that it has a daily objective essentially. All right, cool. I'm moving on from the indices. I'm moving on from the indices to crude oil. I know a lot of you guys don't trade these assets, but you know, I like to cover it anyways. All right, so crude oil flipped the daily and the weekly BC, CB rather, bearish fair value gap essentially. Closed the week very strong. This is interesting to me, honestly. I was looking for the sell side delivery on crude oil, but it got invalidated here. Apparently, we had a lower time frame here, 3 drives, and the third drive popped. Apparently, let's see which time frame is that though. 4 hourly. Maybe we have like 3 drives. It's kind of looking ugly, but it's the same deal. So this is the 4 hourly on crude oil. I can see the buy model actually here easily. Relative equal highs resting above the market price. Price initially moved, first leg formation, came down to the discount, swept the sell side one more time at the discount. This is like this asset. This is why I don't like to trade crude oil. It's highly manipulative. So it swept the sell side one more time in discount, and this plays to the upside, which indicates the second leg or second stage reaccumulation, and it should be a market maker buy model targeting 76.42 early in the week technically. It's probably gonna trade down into a fair value gap though, or even like this inversion fair value. Actually, nah, there's a breaker block there. The fair value gap from October 3 should hold the price in an ideal world for crude. But overall, because things are looking more bearish than bullish for crude oil, in my opinion, I think 76.42, this market maker buy model, should cause a reversal from there. We have also equal highs up here though. We'll see. We'll go step by step. Depends on how it reacts from the first buy side. I'll have more conviction for a reversal. For now, I'm not going to speculate about that. So looks better than Nasdaq though. I'm not gonna lie. At least it's displacing. Alright, gold is the trickiest asset that I've been having problem reading with. So I still have no bias. I was looking for an inversion fair value gap on the daily time frame here. Now last week it actually inverted it, but immediately after, so the day after, it traded above it and closed above it. Right now it's kind of slowly grinding lower apparently and respecting the bearish order block. So for me, for gold, I would not still touch this unless it flips that BC from September 24 one more time. And if it does so, I'll be looking for a market maker sell model targeting the equal lows. This will be ideally a very long position though, like a swing position. I want to see gold clearing the sell side. For now though, this could end up both ways, so be careful. You need to have double confirmation here, due to the fact that how strong it looks and the fact that how disrespectful PA was to the daily PT array. So be careful with this asset if you're trading gold. What's good, Joel? How you doing, brother? But although having no bias on gold, I'm gonna state this one more time. I will be waiting for market maker sell model because it has a very, very good reward on gold and clear drawn liquidity. Coolio. What's next? DXY. Okay, DXY looks interesting. So DXY formed initially, I was mentioning this a couple weeks out, equal lows and then equal highs went inside a weekly CB. Equal lows was swept and it caused a reversal, which is pretty normal because it has also unfinished business at the buy side. And last week, from Monday to Friday, it just basically run for it and it displaced above the equal highs because of the fact that of that displacement. I would actually be willing to be short-term bullish on the DXY, and I would be basically, my thought process goes like this right now. It has to go above go above to the premium fair value gap. That's the main narrative or bias I'm currently having for DXY, but from there on it should actually go for sell side because overall DXY in my opinion should be bearish. So for the weekend, for this week and the next week, I think the drawn liquidity on DXY should be like 100 and 103 point, I would say like 3 to 5 ish, between that range. I would like to see it sweeping the buy side though. That would be ideal scenario, and from there I want to see it getting inside, getting back into the higher time frame micro maker sound model and targeting all these lows. Draw should be 899 and lower for DXY. We'll see. CPI is a very important number for DXY, so anything could change on Thursday, especially if it displaces above the premium fair value gap and violates it. Things will obviously change for DXY. It's also forming equal lows on a very high time frame. I would say monthly equal lows is forming, and if it forms this monthly equal lows instead of rating it during the month of October, I think it's going to get up to the equal highs first and then go for the equal lows from there on. But this is a monthly time frame, so what I care about is the silver bullet. I'm just kidding. So yeah, the only condition for that monthly time frame is how it leaves the sell side. Ideally, it raised the sell side this week, not this week, this month, during the month of October. There's also November. When's the elections? Is it November, the first week of the November or something like that? I think. What else? I forgot. Oh, Euro. Well, I mean, Euro did not complete the micro make it buy model here, but it swept the low hanging fruit objective, the buy side from the breaker block, and it displays lower because of the fact that the XY was actually ended up being very bullish last week. So on Euro, what I would look for is basically I would wait for this retracement first as a target though. That's the problem with Euro. I don't see any clear sell side target besides the fact that it left equal lows here, but at the same time I don't want to see it going down there for now, so I'm not going to speculate around it. But for retracement I would look for, where is it, this inversion fair value gap from a couple weeks ago that caused the buy side rate. Any retracement up there, it also had gap down, so it doesn't even have to retrace all the way up there. It might just form a SIBI here tomorrow or Wednesday, retest the SIBI and go for the sell side. So I have two conditional scenarios. If forms busy SIBI tomorrow, that's going to be IOFED and very weak retest of the SIBI and then sell side delivery. If it doesn't form it, I think the inversion fair value gap will be the play for Euro. Cool. What else? Crypto. I'm gonna be perma bullish, or no, perma bearish, so you guys can get mad at me. I'm just joking, obviously. Let's take a look at it though. It looks interesting. It looks very interesting. It does a lot of damage to the sell side of this Bitcoin weekly. It does a lot of damage to the sell side and leaving buy side open. Very, very, very interesting. Like none of those buy sides got rated, but the sell sides were all got rated. So technically speaking, Bitcoin doesn't have any unfinished business at the sell side, so it should clear all those highs. But at the same time, if it flips any bullish PD areas here, so for example we have a fair value gap on the weekly time frame, which is at the moment is respecting. The weekly will be closing in 1.5 hours, so I don't know if it's going to end up being an IFED or not. But if it violates this BC, I think the likelihood of Bitcoin clearing these equal lows is more. So this wick from August 5 could get cleared down into very deep discount. That should be the bounce, but I don't think Bitcoin will violate 45, 43K. But for now, because it has a breaker block here on the daily time frame with a weekly displacement, it should really deliver the buy side here. Let me take a look at the daily though. Daily tells me a little different story here, honestly. So it had taken the buy side equal highs, displaced lower. We have a CB, it trades up there, should fail and clear the sell side. So if I was trading Bitcoin and if I was holding spot bags or looking to buy spot bags, I would be willing to buy below 49k instead of right now. But for the purpose of day trading or swing trading, I want to see the sell model first and buy side. So here it curls down, forms a bearish short block, retest of the bearish short block, sent down to equal lows, clear the equal lows, form a smart money reversal and go for buy side. This looks more likely and healthy to me and whatnot. Coolio. Sending joy your way. I'm sending you back, my friend. Is that Bitcoin? Yeah, I have very similar idea exactly. Like I want to see ideally like 45, 43-ish. 45k, 43k ish, and then that should be the pico bottom. That should be the golden area, golden zone to buy spot bags, and then it should go for 74k, basically all-time highs from there on. A very similar thought process with you, brother. Alright guys, did I miss anything? Let me just double check that. I cleared all that. Tesla, I want to look at Tesla real quick. Damn you, Tesla. I still want to see 314. It's been more than a year actually. Still hasn't traded up there, but yeah, I think that should be the draw liquidity from Tesla. But anyways, guys, if you don't have any questions, I'm gonna wrap it up here, and I'll talk to you guys tomorrow. In the meantime, I'll be posting all these stuff in my channel as always, with the annotations and everything. But thanks for being in here. Coinbase, yeah, sure. Coinbase is. Let me start with the monthly first. Okay, never mind. Let's go to the weekly. Alright, Coinbase. I mean, by looking at the monthly, the weekly time frame, I can tell that this is in sell side delivery for now, at least right now. Hold on. Because the order flow is bearish for now. Here's my thought process though. So it formed this high, then formed a low. There's this range, right? In that range, it attacked the buy side, and that buy side purge basically caused the displacement, right? That displacement got retested up into the 50% of it, and it sold off one more time. So essentially, that last candle, before the latest dump, August 19, that is a bearish order block, and it should actually clear the sell side maybe one more time, and then I want to see accumulation if it's bullish. But for now, I think this is in a sell side order flow. It also has clear lows here. That doesn't look that good. The what's that level? 69.63. To me, this is a very highly suspicious level. Like one displacement will take Coinbase down to 70s. As for buy side, it doesn't have any unfinished business at the buy side. So it took all the buy side liquidity before displacing lower, which makes it a bit risky for longs. I would be looking for shorts than longs for now, because of a couple things. Like I said, this low doesn't look that good, and the buy side before every dump it got manipulated, basically taken out, which looks healthy for sell side delivery. And the order flow itself right now is bearish as well. Very valid gap, order block, displacement. Right now it's trading into that order block and displacement. So ideally, if this wants to turn bullish at some point, I think it's going to be below somewhere like 100 and 110ish, that area. It's going to accumulate first though, and then pop. This is a lot, and this is the weekly time frame, which means it's going to take a lot of time. On the daily, let me check daily as well. Yeah, on the daily it looks even worse. It has these equal lows, market popped. There is this jagged move here caused displacement. I think it should clear 70s. I'm not gonna lie, this looks like it's sell model. Reversal area. I mean, from there though, from 70s, it should make the rally. Below, yeah, from 70s or below 70s, I would say. I hope I didn't make you upset, brother. Whenever I make a bearish comment on stocks, I don't know why, but I feel bad for some reason. Not for you or anything, or for someone necessarily, but I know a lot of people are usually bullish on stocks, so it makes me feel bad. Just automatically, I'm thinking, oh, people are losing money instead of making. So, bull or bear, we don't care. That's the way to go, man. I love how you're thinking. When I tell my friends that I'm trading, I'm a trader. I day trade like full time. Like when I told that thing, my dad is like, oh, Nasdaq dumped 5% on the day. How much did you lose? I'm like, Dad, just stop. It doesn't matter if it dumps or not. Like, I can trade both sides. And he's like, oh, nice. That's what I wanted to hear. But yeah. I sold at 230 looking for a new entry. Oh, okay. If you don't have already a position in Coinbase, I think the best buys will be, I mean, this is in a perfect world, okay? I have to make that clear because it technically does not have to go there, but in a perfect world, it should clear 70s and consolidate below it here, like in that range, like 60 to 70 range, and then that consolidation basically should be a long accumulation for smart money, and that should be a start for a buy model, and in that case, it should clear 280s. So that's a very good return also. Like if it does so, even I would buy it. 323%, bro. Like, I'm gonna set an alert there just in case. And here at 120s. Alrighty. Alrighty, guys. Yeah, I'm gonna wrap it up here, guys. Thanks for being in here. I'll talk to you tomorrow on the live stream. Let's get after it, man. I'm so hyped for the week. CPI. I love CPI weeks. Let's kill Nasdaq. Let's get it, man. Let's get that money. Anyways, have a great Sunday, guys. I want to say something, but I forgot. Anyways, take care.